Good morning. How's it going, everybody? Good morning, good afternoon, good night, depending which part of the world you're from watching the stream. Welcome to the Capital Hungry London trading stream. We're pretty early tonight. Usually we start at like 1:30, 2 a.m. Eastern. So we're just going to be waiting for people to join, then we'll be jumping into everything, you know? I'm not feeling any drama or banter mode today. I'm feeling strictly analysis mode today. So for anybody who came for banter later on, there might not be any tonight. I'm not in that mood today, you know? Sometimes I'm in the mood, sometimes I just want to focus on the charts. I heard there was already enough drama going on IG earlier today. But how's everybody doing? Is the audio and visual check good before we start jumping into anything? How's everybody doing in the YouTube chat, in the Zoom chat? Let me pull up the chats. What regulars do we got here? Jad, how you doing, Jad? Tough Love, Tough Louvre, seeing you many times before now. Timbuktu, a regular. Appreciate the support. Office Formal. I see some nice repeat names here. I see some full 8 seconds. Mr. Eric Wong, Fercho Ravaz. I see a lot of repeats here. I like it. I can't say everybody's name, sorry. Take me 20 minutes. I'm great. Actually, to be honest, I'm not that great. I'm a bit under the weather. I've been sick for the last couple of days. That's why I sound a bit nasally. And if you guys hear me coughing here and there, just don't mind it. You know what I mean? As soon as I said that, I had to. All right. So I'm just a bit under the weather, but other than that, I'm pretty good. Like I'm good, I don't want any Rona jokes. I don't want no virus jokes. Those AJ buys ran pretty smooth, right? Once we broke that area, AUD USD as well. I don't want no virus jokes. It's just the Canada weather, it's the Canada life, okay? I'm gonna check out everybody's charts and everything. What alarm? This alarm's still going off here? There should be no sounds with the alarms right now. What are you guys hearing here? All all alarms are off. Unless it was this one. No, all alarm sounds are off. Okay, man, everybody's a doctor, eh? In the comments now. Hey, G, take vitamin D3, zinc. Don't forget to work out. Yeah, you guys are all doctors now, eh? Is my voice okay or is it low? Before I start giving analysis, I want to make sure that I don't start talking about the markets and then nobody can hear me. There shouldn't be any of these key level alert sounds. We'll just like obviously be watching the key levels, but other than that, you know what I mean? Yeah, don't worry about this. This is a 1 minute time frame. I'm seeing some potential exhaustion and potential buys at 1715 and 1721, but we'll talk about that after. Yes, sir. Yes, sir. My voice is low. Let me see. The volume and everything is as normal as it is every stream. But anyways, let's get into it here. Okay, so before we jump into the meat and potatoes, let's look at some of our stream reminders and a little bit of the nitty gritty. If you guys don't mind just taking a couple of minutes to read the YouTube stream description, as well as the stream reminders right in front of your screen. All right. This is just going to tell you a bit about how the stream works, what we do here, the process as well, like sort of the layout. Because a lot of people sort of be spamming like GJ, tell me about EU. But like the process through this stream has been pretty similar throughout since I started on the YouTube streams, what, like 4 months ago now? And we always start out by first doing our introduction to the stream, then looking at any economic events and fundamental factors that may be at play, looking at investor behavior by observing the strength of safe haven currencies, standalone, the volatility index, and our equity markets. And then we start jumping into analysis on gold. Then after gold, I go to GJ. After GJ, I go to GU. We pretty much look at like 5 or 6 pairs for potential trade ideas. Doesn't mean we're trading every single pair, but we're doing analysis on these various pairs, looking for any potential high probability opportunities. And I go in that particular order. So, like, if I'm doing gold analysis, don't just start spamming GJ in the chat. I will get to it. I just want to like make sure I take my time and give proper information through my perspective on the markets so nobody gets confused and people understand the message I'm trying to convey, right? So just read these stream reminders. You guys can feel free to ask questions and ask sorry, yeah, don't mind my voice and stuff if I cough here and there. I'm just a little bit sick. But you guys can feel free to ask questions and share charts. I would just prefer it if you wait for that till after, like I do the analysis on the main pairs we look at, right? Don't come in here asking for like direct signals, because at the end of the day, we are traders. Trading is not just about taking trade after trade after trade. There's many aspects that make a successful trader, right? And one of them is the psychology side, which a lot of traders, marketers, they ignore nowadays. Okay, anything as per how to contact me, the free Telegram analysis channel, the free Capital Hungry News Twitter, the Capital Hungry YouTube itself, all the links and information are right there. And if you need it, just again here, this is the Capital Hungry free Telegram analysis chat where I'll send updates about when I'm going to do the stream or yeah, I like that comment, Fercho Rivas. I agree with you there. Trading will teach you a lot about yourself if you're self-aware through the process. But anyways, the Capital Hungry Twitter, news Twitter here, always posting headlines throughout the day. You guys can follow that, starting to gain some traction. The YouTube page itself with tons and tons of educational resources and webinars, and the Telegram chat. All right. I just want to get this stuff out of the way because usually by the end of the streams, there's a lot of new people that come in late and start spamming. Oh, how can I message you? What's the private chat? Or, oh, do you do any streams? All these questions that are like pretty generic. So if anybody comes in late asking these questions or asking about analysis, just give them a quick reminder to rewind this stream to like the start to get the resource information, or to like 20 minutes in to get the gold analysis, and we can work together in that fashion, you know? So now that we got those stream reminders out of the way, before we start jumping into what economic events and fundamentals we have at play, don't forget that yes, we want to come here and collectively work together, do analysis, and potentially make money in the markets. But being a trader is not just about taking trades. I feel nowadays the trading mentality needed for success has been heavily ignored in our modern, I guess, modern industry or social media side, because all these marketers and services are trying to sell what's fast, easy, and convenient because that's what sells. All right. So even though that's what sells and that's what is exposed in our trading industry, that is actually the opposite of what is going to bring you your individual trading success, right? A lot of those things like signals, account management, these various algorithms, I'm not saying they can't work, but the purpose of them is to sell the ease and convenience of potentially making money in the markets. And we know that's not realistic. Okay, so as traders, we have to one, have realistic expectations, two, have respect for the markets. Please understand, have respect for the markets. And three, stay as emotionally neutral as possible. So remember to follow these little mentor reminders of continuously following your trading plan, following your risk management plan, focusing on the long term vision rather than short term satisfaction or short term impulsive desires. And when you can do this consistently, this is what's going to help you survive in the markets. Most people don't understand the number one rule in the markets. Number one rule is first is learning how to survive. It's survival. It's not about profiting. It's first learning how to ride the waves of the market and be involved in the markets without consistently crashing your accounts, being active in the markets for a consistent period of time. It's surviving the markets. After you can do that and you learn to protect your capital and risk, then you can start focusing on profiting. Everybody understood about that? Yes, sir. Yes, sir. Okay, so some of the economic events you're going to see on your screen, but for the private members, you guys obviously get the reports at the start of the week. At 4:30 a.m. Eastern, we just have the UK construction PMI data, and pretty much other than that, we don't have too much other economic data that's pre-planned that's going to impact euro or GBP pairs overnight. We might have some speakers from like Bank of England or political speakers overnight, but don't worry about that, because if we get any reactive headlines, you guys will see that pop up to the left side of your screen here, where you're going to get all of the reactive headlines overnight. Okay. So not too much else going on. Besides that, at 8:30 a.m. Eastern, during New York hours, we have the U.S. initial jobless claims. Some key fundamental points to focus on are, even though we saw a lot of our risk currency against safe haven pairs or the global stock markets do a pretty aggressive pullback towards the end of February, which was really just the end of the month pullback to set up order flow for the new month, we still have the markets relatively optimistic. This optimistic impact on the markets or investor confidence translates to us seeing that global stock markets are bullish, risk currencies are bullish, but our safe haven currencies stand alone, such as the Japanese yen, the US dollar, and the Swiss franc, are all respectively bearish. Okay. Also, keep in mind that it's still early into the fresh business month. So we do have our monthly candles for the month of March still just setting up, and we can look at that later on. And the main fundamental focus globally has still been on the vaccine rollouts and distribution and COVID control, meaning we haven't had any new fundamental fear catalyst in the market to shake this investor confidence or to shake this optimistic run. And what we can see when we jump into our gold analysis now is ever since gold peaked these 2075 highs, and I talk about this over and over, we have been in this corrective bearish market structure or technical descending channel, right? That was one of the main reasons why primarily last week's YouTube streams, if you guys were there Tuesday, Thursday, or if you guys were here on Tuesday, what have we been primarily taking advantage of on gold is the impulsive sells down. And what I want to highlight to you guys in this market structure is two things. One, with the market optimism, gold's demand is starting to decrease. And as gold mines and production areas are opening up again around the world, gold's supply is also starting to regulate. So one, all of the fear was priced in when we had this massive impulsive move to new all-time highs at 2075. Since then, we had the coronavirus fear sort of start to dissipate from the markets, respected support from the central banks, and then more market optimism with obviously all of the flood of vaccine headlines and economies starting to open back up, right? So now, with that market optimism, gold buyers positionally have been exiting positions and sellers have been jumping in, creating this corrective bearish market structure, right? What we want to identify is that the stronger impulsive moves are primarily bearish, going to print new lows, and then you have these bullish pullbacks or consolidation phases. So primarily sellers have been in control. This is nice to identify, it's easy to play. So for the last couple of weeks, we've been primarily taking advantage of this sell-off. But what we can't ignore is in this corrective bearish descending channel, the corrective bear structure with that overall market optimism, every time that gold sellers impulsively create a new low, we get a very, very aggressive bounce with the correct price action confirms that have us go to retest the bearish market structure, or at least continue to play in this descending channel, right? So for the last couple of weeks, we've been taking advantage of the gold sells with perfect reasoning why, of at least going to revisit these previous lows to the left here and potentially going to create new lows, because that is the way gold has been behaving since August of 2020, ever since we peaked those 2075 new all-time highs. We also understand this because we've had this historical repetition happen before, when we had the 2008 financial crash, and after that 2008 financial crash was priced in, gold started to enter this higher time frame consolidation until we entered an economic recovery stage where the demand of gold decreases because it's a precious metal safe haven. That's what it's used for as an investment purpose. We had this massive correction. So now we've seen something very similar with this repetition, where we've had this impulsive move from the pandemic market fear, the trade wars of early 2019, 2018, the potential Iran war that almost started 2020. We had all this economic uncertainty in the markets for an extended period of almost a year and a half consistently, where buyers just kept piling on the orders and pooling more money into the safe haven precious metals such as gold, until we peaked brand new all-time highs. And then as we peaked all-time highs, with the timing of the markets, we also started to notice more optimism. Economies slowly start to open back up. The fear of COVID start to dissipate. This flood of vaccine headlines. Every country coming out with 2 vaccines each. You know what I mean? There's like 10 active vaccines right now. So now we're starting to see this potential deeper correction on gold and this bearish market structure being respected. But we have to be very, very cautious of a potential bounce from this new intraday low that has been created, because that is the way gold has been behaving in this bearish market structure, right? You can see we do these very aggressive dips, and then as we notice as we notice exhaustion by sellers and a technical support being formed and a shift in that intraday bearish market structure, then we notice these very aggressive buy bounces, right? So for me, with gold's current price positioning, when we're zooming in on the intraday time frames, it's very hard for me to start taking more gold sells. Don't get me wrong. You guys were watching the stream since last week. We were taking 1803 sells. We called the 17 like 80 sells, 1760, 1739. You know what I mean? Like we were taking sells all the way down. But now that we finally created a more significant impulsive low, where even when you're looking at the ranges of this low prior to this low now to this low, it's pretty similar, right? So we do have the potential that on the intraday time frames, sellers can start exiting positions here and buyers can grab this dip to cause a pretty aggressive pullback. And I wouldn't be looking for sells unless we broke below these lows around 1708 with intraday candle body closures below. Because even when we come to the intraday time frames, you can see that we had this very strong sell-off. We had this pullback sell-off. But look at how you started to get a mix of bullish and bearish candles. You started to fail to break this low point. We're starting to create a bit of an intraday order block in consolidation zone and a bit of a technical support. It's very similar to when we've seen gold peak previous. It's very similar to when we've seen gold peak previous impulsive lows, where I don't know why that square got so big, but what I'm trying to say is where you have these strong impulsive moves, but once you start noticing that exhaustion by sellers, that mix of bullish and bearish candles, the bearish candles starting to get smaller, buyers starting to jump in the market, and then you also break above that bearish market structure you would probably be watching on the intraday time frames and lower time frames, you have a lot of room to the upside, right? And we've seen this many times whenever like an impulsive low is created. When you're looking here, like you have this massive sell-off move, you start to notice this exhaustion where you're not seeing as strong sellers impulsive candles. You're starting to fail to break previous low areas, and then again you're getting a shift out of that bearish market structure that was being respected for an extended period of days, and then you get that upside move, which these upside moves are hundreds to thousands of pips. Not hundreds of thousands, but hundreds to thousands. You get what I'm saying? So now we have to be very, very cautious with what we are starting to see here. Yes, gold is still was respecting this bearish market structure and sort of still is, right? But we are starting to get signs of exhaustion at these lows, at these new impulsive lows created. So if we could potentially start to get some high risk buys in this area, and this hourly candle ends up flipping potentially bullish, or the next hourly candle just grabs liquidity and ends up flipping bullish, we could see similar to what we were talking about when we were looking at how gold is behaving to the left, right? At this point, with the current price positioning that gold is at, it's not doing a pullback. It's not like melting down to the new low. It's already created the new impulsive low, right? It's going to be similar. So we're sort of in this stage here now, if this makes sense to everybody, where we need to validate, where we could get some higher risk buys in this area, but we do need to validate the break out of the structure, and we can see some nice bounce buys and this macro dip being bought up, right? If that makes sense to everybody. Does that make sense so far in the YouTube chat, Zoom chat? Okay. So I don't feel confident taking gold sells unless we break below 1708. We've been in that sell bias for almost a week and a half now. Now we're coming to a new impulsive low created, where this low we could have sellers exit positions and buyers start to jump in. Okay. And what I want to look at, what I want to show you guys, this is the 1 minute time frame now. Okay. We had this bearish market structure that I was showing you guys from 1803 being respected, right? I'm just dragging this along slowly, where we had impulsive sells, pullbacks, impulsive sells, all the way down to pretty much this 1708 area. Besides this heavy liquidity grab that happened here, which is just a price grab in my opinion. Yeah, the Zoom chats are every day, right? So we had this bearish market structure being respected until this point where we started to get a potential bullish market structure developing, failed to break 1739, and sellers jump back in the market. So sellers jumped back in the market, and we went all the way down to revisit these lows, but essentially failed to break multiple times now. So what I am starting to see here are the first signs of sellers exhaustion. Sellers starting to slow down, buyers starting to enter the market. And what I'm also starting to see here when we're looking at the more refined lower time frame structure, just based on the 1 minute, is here since NY pretty much for about a full day's period now, we've had this bearish market structure respected until we went to revisit these previous intraday lows, and now we're potentially breaking out of the bearish structure and retesting and creating a support at 1715. So pretty much overnight, what I'm looking for is if we have London open spike down to 1708 and fail to break, high risk, high reward buys here. Listen to me carefully. This is high risk, high reward. Your only confirm here is that we're potentially going to reject and just grab liquidity at these previous lows and fail to break again. You really only essentially have about two confirms. The price point we're looking to react at being previous intraday lows, where we've had a lot of lower time frame rejection, and then price itself failing to break there. It's high risk, but it's high reward, because if we do come down here again and fail to break as we're making our way up, you're already well in profit before somebody else who's waiting for more confirms but a safer potential entry. That's all dependent on your user risk threshold, okay? But otherwise, if we have what time is it right now? Because we have pre-London coming in 9 minutes, right? So we have pre-London coming in 9 minutes. If we just create a support at 1715, we can easily take buys right back up to 1721, with the safer buy options being above 1721 and then starting to scale above in that fashion. I'm only looking for gold sells at this current price point if we finally break below 1708. And if we can have clean candle closures below 1708, we can at least go to revisit these minor lows and go to create a new low at 1700 flat. Otherwise, we're seeing a lot of exhaustion by sellers at this price point. We have created new impulsive lows, and we do have the potential for sellers to exit positions here and buyers to jump in and have a pretty aggressive bounce here. So only really I'm looking for sells below 1708, or if we go up to 1739 again and fail to break. Does that make sense to everybody? So I don't have to repeat myself again. So let's just see in the next 7 minutes how this hourly candle is going to close. I do like how we had this little break above the bearish structure, this little minor support above the key level, and an impulsive move to the upside, and this potential retest here. I would like if the new hourly candle makes a lower wick at 1715, fails to break, and then takes us up, or if we get a deeper pullback to 1708 buys. The safer buys would be that pullback and then break out above 1721. And I'm only looking for sells if we break below 1708. That's the only way I'm looking for sells. Okay? All right, perfect. Yeah. All right, so let's go to GJ now. GJ, this is just the 4-hour chart. We don't really have to zoom out that much to the higher time frames. It's not hard to see that GBP JPY is extremely bullish and we know why it's been bullish because what do we have here? We have the British pound against the Japanese yen. The British pound goes in our basket of risk currencies, while the Japanese yen is a safe haven currency. So when you have markets are optimistic with the support of the central banks, in this case you have the Bank of England supporting UK's economy and UK's markets, and when you have this investor confidence so strong in the markets, you have your risk currencies like the British pound, the Canadian dollar, the Australian dollar, the New Zealand dollar, the euro, extremely strong, and your equity markets very strong. But your safe haven currencies weaken because people are taking money, investors are taking money out of the safe haven currencies and putting it into the stock markets, putting it into the safe haven, putting it into the risk currencies. Sorry. So that's why fundamentally and technically, if you look at our main stock market indexes across the board, overall they've been primarily bullish. You know what I mean? And our safe haven currencies, even though we've had a bit of this pullback, like on the US dollar relatively is bearish. The Japanese yen is bearish. The volatility index, which is a good fear or greed indicator of the North American markets, is just the inverse of the S&P 500. That is also relatively bearish and flat, right? So we're going to be primarily watching the US dollar movement overnight on the intraday timeframes to see how smart money and how the market maker money overnight is flowing through the safe haven currencies. Because if I see that US dollar on the intraday timeframes overnight stand alone, this is just the dollar index, right? If this goes bearish overnight and the stock markets across the regions end up with a bullish push, this is showing me that investors and smart money is pooling out of the safe haven currencies, taking money out of the dollar and putting it into these higher risk, higher reward investments with the optimistic market sentiment, right? So obviously, when we're looking at GJ, with that overall market optimism, and remember everybody was panicking about this crash towards the end of the month, and I told everybody relax. Remember everybody's like, holy shit, GJ's having a meltdown. GJ's having a meltdown. What's going on, man? Is fucking Brexit happening again? Is there another virus? I was like, everybody relax. It was the end of the month for February, right? What we have to understand is buyers printed new highs. Nobody is going to stay in the market forever. You have traders that are trading various time frames and market makers on various time frames. This is what causes the lower time frame waves with most of the algorithmic trading. This is what causes most of the intraday waves or the higher time frame waves with the positional traders. So with this overall GJ bullish trend, whenever you have a new high printed, you have the transaction and reaction of those buyers exiting out positions and cashing out of the market, and sellers jumping in hand to relieve them out of the market, right? You can't have one without the other. So when you have these new highs printed and then these pullbacks, what you have to monitor as a trader is, has this pullback broken a previous low technically or broken the overall market structure? If it hasn't broken the structure or broken a previous low or is just retesting a previous high, then it is simply a pullback. It is simply a correction. It is simply buyers exiting positions. This pullback also acts as a way to push price to a better demand area so buyers can re-enter the market, because who the fuck wants to keep buying at a high, right? So when we see GJ here zoomed in, we understand that the overall structure is bullish. We've only had highs printed and pullbacks. Pullbacks that do not break structure, that do not break previous lows, even when it was the early stages of COVID. This was the COVID crash. From this point, Bank of England started jumping in, and we had them support the UK economy and the UK markets. Since then, we've had bullish market structure since. Here we've had very impulsive upside moves. The sell-off and correction is pretty related to the impulsive move, but it doesn't break structure. Even here, you go to print a new high, you have a very strong sell-off and correction, but it doesn't break structure. It doesn't break the previous low. It doesn't break the trend. And what we have to understand is pretty much from December, November forward, we didn't see really any aggressive pullbacks on GJ. GJ was just trending bullish. We didn't see any aggressive pullbacks. So to see this, where at the end of February, where another new high was printed, and it was the end of the month, it was just buyers exiting positions. There wasn't even any news for this. It was just buyers exiting positions at a new high printed at the end of the month, cashing out of the market, creating a pullback. And then that lined up to push price down to a better demand area where buyers jumped right back in. And now we're going back to revisit these highs like we've seen every single time before and before and before. Does that make sense to everybody? So GJ or any risk currency against a safe haven pair, I'm still essentially in a bullish bias because markets are still optimistic. All of the fear from the pandemic markets has been priced in. We're primarily focused on all of the vaccine optimism and economies opening back up. And the smart money, the institutions, the market makers, whatever you want to name them, or whatever verbiage you want to use, the people that move the markets we trade, they don't give a fuck about the people that are suffering or lost their jobs. They're getting richer and richer. That's just greed and corruption at the end of the day. Okay? So, GJ here. I am still in a bullish bias on GJ. This pre-London candle, which just opened up, I like how it's opening up and doesn't have an upper wick. If we can just get a liquidity grab and a lower wick formed and then come back above 0.500 or even just create a support at 0.500, I do see continued buys up to 148, 149.8, sorry, and slowly making our way back up to these previous highs at 150.5. We're going to identify some lower time frame bullish market structure here as well, because I wouldn't be looking for sells unless we broke that structure on the lower time frame. I'm in a buy bias on GJ as long as even if we pull back at London Open to retest this bullish market structure that's been respected ever since we broke out of this corrective bearish structure on the lower time frame. This is going to be a lot easier to see as well. So even if we do a pullback at London Open to like 0.200 again and then come back above, still buys. You know what I mean? I would only be taking sells below 149.2, 149 to be safer. We can already see that this pre-London candle already retested 0.500, made that lower wick, and is already starting to turn a bit bullish now. You know? So GJ and then GU is going to be a similar idea as well. We still have the Brexit optimism active. We still have overall markets optimistic. Standalone, our US dollar and Japanese yen are still relatively flat. And even though the UK stock markets are showing a bit of exhaustion at these highs, they're still bullish when you're looking at them on most of the higher time frames due to that Bank of England support and due to that market optimism, right? So, yeah, no FOMO because we still have London Open itself, and we're going to be watching the markets till Asian close. Hopefully, we could get a more aggressive pullback to retest that bullish structure in 0.200 at London Open, and then better risk versus reward buys. Or if we just end up creating the support at 0.500, I can see the momentum continue to 149.8. Just give me one sec here. I got a quick cough attack. Okay, sorry about that. I'm a little bit sick here. But GBP USD, we're going to quickly review this because it's not going to, the structure and the fundamental concept behind it. What's different between what I just showed you on GJ and GU? One, obviously, the primary in the quote GBP is the same, right? But number two, we have to look at the structure. It's exactly the same. Then ask yourself, wait, why is it the same? This is still a different pair. It's not GBP against the yen. It's GBP against the US dollar. Why is the structure almost essentially the same? And even when we had new highs printed, the structure is essentially the same. Like we had these highs and then a sell-off. We had more aggressive pullbacks early COVID. Then after August, we just had this bullish trending market. Why? Anybody? 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 Why does GBP USD have the exact same market structure as GBP JPY? Thank you, thank you. Yes, sir. Because the US dollar and the Japanese yen are safe havens. Exactly, GBP against the safe haven currency. So we're gonna see something even maybe similar, maybe not exactly the same, but GBP CHF, like it's not exactly the same, but pretty similar. Because what are our safe haven currencies? The Japanese yen is a safe haven currency due to its debt structure and negative interest rates. The Swiss franc is a safe haven currency due to its private offshore banking and it being a haven for how its banking is. And then the US dollar is a safe haven because it's the world's reserve business currency, right? So when you have your secondaries in the pair as safe haven currencies, you're going to see similar structure across the board. Now look at this. Now what if I put AUD CHF? How come it's almost the exact same as GBP CHF in the overall structure and trend? Or if I put NZD USD, or if I put Euro CHF. This is a little bit messier, but still like bullish structure since the COVID crash, right? Why are all of these pairs following the same overall market structure and trend? Does that not interest you guys? Does that not spark something or connect some dots? Why are all of these pairs that follow a risk currency versus safe haven structure or concept trending and moving the same technically? Because of those fundamental concepts of how smart money flows through the entire market. Whether you want to call it smart money, the market makers, etc., etc. Whoever's the market makers that are moving the market, they're pooling their money into the risk currencies and taking it out of the safe haven currencies across the board. So the entire basket of risk currencies is stronger. The entire money flow is going into those risk currencies in that basket of risk currencies. Your euro, your AUD, your NZD, your CAD, right? Like we could go to CAD JPY here. What's the difference between CAD JPY structure and GJ structure? Even with this pullback here at the high and revisiting the highs now, what's the difference? Click these things in your head. Connect the dots with the technicals and those fundamental concepts. You know what I mean? Now, UJ is not going to look like this. How come UJ is very indecisive? How come UJ has extremely indecisive sporadic moves and was bearish for a bit, now bullish? Why? What do we have here? What conflict is there here? In this pair, you have two safe havens. So you have a tug of war, right? You have a tug of war of which one is weaker. Is the dollar weaker? Is the yen weaker? It's not like having a risk currency against a safe haven where it's easy to identify that during market optimism, the risk currency is going to be stronger and the safe haven will be weaker. So when you have a double safe haven, it can be very messy and indecisive, especially when you have a fundamental fear catalyst. Because let's just say you have fundamental fear come in the markets, like what you had happen here in March, right? When you have fundamental fear, both the US dollar and the Japanese yen are strong. This is why I don't trade pairs like GBP, NZD. You know what I mean? Where you have two, and here you don't have two safe haven currencies against each other. You have a risk currency against a risk currency. Usually, most of the times, the yen is usually a safer haven than the US dollar. How can you confirm that here? This looks like a mess to me. This is a 4-hour chart where you have price going up and down. Where you have price going up and down 1,000 pips in a month due to that indecision because you have a safe haven against a safe haven, right? So look at the structure difference in the confusion you can face trading this pair or trading like something like, and I'm not saying you can't trade these pairs. Like these pairs obviously still have liquidity flowing through them. But look at the difference here with the structure. Look at these sporadic moves compared to something like GBP USD. Right? Look at this. Look how beautiful is that? You don't have to fight that. It's easy to understand. You know fundamentally why it's bullish. Look at that. Right? Even Euro USD essentially been doing the same thing. Instead of having, there's only two ways. When you have a bullish trending market, there's two ways to trend in that market and grab liquidity, right? You could get a upside move, impulsive move, and then a pullback, which is usually a 50% correction, or pushing price down to a demand area, then a continuation up. Or you get an upside move, a consolidation phase, a consolidation zone, and then another upside move. It's beautiful. What happened to your ears? What happened? Did our alert go off? No. So here we can see that overall Euro USD has been extremely bullish. But instead of having aggressive pullbacks like GJ does, when you have a new high peaked on Euro USD, you start to enter a consolidation phase. Oh, sorry, the mic bump. For example, you peaked a new high here, consolidation phase. You peaked a new high here, consolidation phase. But even in this consolidation phase that can be a bit messy, we're still having a continuations to the upside as this is buyer side liquidity generating in the market, unless we have a fundamental catalyst to shift that. You know? Fuck. Any of you guys in the gold buys from 1715? It looks like we got that quick little retest and then the candle on the hourly. But we're still going to be taking safer buys if we can come above 1721 as well. GJ as well retested 0.500 a couple of times now. So it'd be nice if we could continue to create a flat candle body support and squeeze up to 0.800, but just watch price action there accordingly. And now let's go to GBP USD. All right, so GBP USD, I'm not going to talk about it too much because very similar idea to GJ, and now you guys understand why, right? What is that question for? Oh, Timbuktu answered your question. Sorry, I just saw that now. Okay, so GU, similar idea here. We don't have to talk about it too much. I just primarily want to zoom in to the market structure for us to look at potential buy points. In Capital Hungry, we started to look at these potential buys here, where we were watching this bearish market structure, this corrective structure that was being respected for like a day and a half, until we started to notice a flat candle body support on the lower time frame, and then a break and retest above that bearish structure to start taking buys up, right? So that was good so far. But now you could see that we really started to enter a consolidation zone here. But I do like this zone we are sitting at for a potential buy zone. But I can see London Open potentially grabbing liquidity here and then continuing to the upside. The good thing about when we can trade GU is that we can actively watch how the dollar is moving standalone on its lower time frame price action as well. So if we see the dollar when we zoom in here, which is the dollar index, Dixie, right? If we see the dollar bullish overnight, the dollar index standalone, then probably it's not the best idea to be taking GU buys, right? Gold tapping the next key level. Yo, let's get an early W in the chat for the gold buys I was talking about. Come on, guys. That's a quick W. That's a quick W. That's a quick, easy W. Even if you got in like a bit later here. That's a quick, easy W. What time is it now? If we could get a nice 15 or 30-minute candle close above 1721. I do see further buys above 1721, but we have to have a clean break above here, all right? Thanks, Timbuktu. I appreciate your support. You always hear, even though you don't trade forex, but I like the discussions and shit you bring to the table. You know. GJ still holding 0.500. If you're in the 0.500 buys, we don't have validation to continue up to 0.800 unless we break above here. If we get some 1 minute candle closures above here, then we'll continue up to 149.8. All right. So just we're getting a bit of a slowdown here. So just be cautious of that. That if we come to test 0.500 again, we might dig a bit deeper to do a deeper pullback for London Open, because we still have London itself. And gold, let's just zoom in here and watch if we can break above 1721 for some further impulsive buy scalps to the upside, because it is looking pretty good still in my opinion. I just need price above the key level. Key levels are cheat code, yo. Come on. You guys gotta be honest. Who else have you seen with these gold levels? The gold levels are a cheat code. Right? All right, GU. Now, GU isn't as clean as GJ has been, because this has been extremely messy with this ranging we've had for about, how long is this? Almost a day and a half. Yeah, I'm gonna go from GU to Euro USD to USD CAD and then US 30. Let's just do GU here quickly, and then I'm gonna do Euro USD. Bro, zoom in your chart. Your screen fucking zoom out. That's because it's a 4K monitor and you're watching it on like a 14-inch monitor. So obviously it's gonna be hard for you to see. So how long is this? This is a day and a half here where we've been having this range of almost 60 pips up and down. But what I do like is that we've had strong rejections in this area, and we've broken out of that bearish market structure, right? Like, remember I was showing you guys that bearish corrective market structure after having this exhaustion at these lows. So what I am looking for is either London Open to retest here, fail to break, or support created at this gray zone I got marked out for buys at back up to 1.04 key level. The safer buys would be if we come above 1.40400. This would be the safer buy option, would be to patiently wait for us to break out of this consolidation zone we've been in. Huh? Yeah, us to like break out of this consolidation zone and continue to respect that higher time frame bullish structure, and we can validate all of this as buyer side liquidity with a breakout above 1.40400 1.40 flat. That would be the safest buy option. But I'm also watching these gray zones here in the lower time frame through London Open. Yes, sir. Yes, sir. Right now, this isn't looking like clean buyer's price action so far, so nothing too significant there. All right. Gold, no clean break above 1721 yet for further buys. If you guys got in at 1715 or 1716, I would secure some positions here just in case we get an aggressive pullback, and then hold your runners risk free and possibly scale in more once we break above 1721, that higher time frame key level. 1565 area on gold, a good buy for the long-term view? Yeah, sure. Why not? 1550, 1500 be a great buy. Fucking retard questions, man. 1400 too. 1400 is a great buy. 1550 is a great buy. 1600 probably be a great buy if we came down to there. Right now, we're at 1700. All right. You're talking about something 15. You're talking about something almost 2,000 pips away. How about you focus on what's going on now, in real time? I'm just joking around, but I'll go back. I'll have to. I'll answer your question properly after I come back and finish these analysis. I'm just joking around right now. I'll go back to the gold chart and zoom out to the higher time frames to tell you if that's a good higher time frame positional trade. You know what I mean? From like if gold does come down to 1560 area again. So just give me a 10 minutes here to go through Euro USD, USD CAD, and US 30, and then I'll go back to answer some of your guys' questions and stuff. I think this is a 32-inch Samsung monitor, 4K, whatever. But anyways, guys, Euro USD, risk currency against a safe haven, right? Now we all starting to understand what that means to us fundamentally, and especially during times of market optimism. So even though Euro's showing this exhaustion here, we've seen this before many times where we're at highs, it starts to enter a consolidation phase. What we have to watch is these critical reactions at these lows. See how EU, it looked like it was going to start to have more of an aggressive sell-off, and then you had this significant low area created and a failure to break. Then buyers jump in from that demand area, and we finally broke above the order block high and continued up into new highs. Okay, so with that being said, with how EU has been behaving, you only have impulsive upside moves with the market optimism and then consolidation phases. The consolidation phase size, technically, or how long it can, or how long the pair can consolidate, we don't know that. All we can identify are the highs and lows of the higher time frame order block. So for example, when you're zooming in here, you can see from these highs and essentially these candle body lows, after having this aggressive upside trend and push, you start to have buyers exit positions, sellers jump in hand, but instead of having an aggressive pullback, you just have a consolidation phase to generate more order flow and liquidity in the market. This consolidation phase was almost like a month long, right? Where you finally had enough order flow and then a break to the upside to create new highs. Then you have something similar happen here, but this was a much larger consolidation phase. And what you have to watch is where that impulsive low is created, such as this area. This was a pretty strong sell-off, but it didn't break higher time frame structure. It didn't even go to retest previous highs, not even close. So yes, we were consolidating, but when we had this sell-off again, look exactly where it rejected. Okay? So higher time frame and fundamentally, I still am in a Euro USD buy bias. What I am watching is this significant low that has been created, which just happened to go to retest previous highs and fail to break. This low and pullback from these highs. So these highs, you have highs printed. New highs are printed, buyers exit positions because they want to reap the rewards from their buys. They're not going to stay in the market forever. They want to go buy hookers and cocaine, right? They exit the markets and then sellers jump in hand, and you have price pushed down to a better demand area for buyers to potentially jump back in. We come back down to retest the previous high that was created, and we fail to break. So this is a very significant low price point to us. I can't comfortably take higher time frame sells unless we broke below here, right? So even if we do have some short-term Euro USD sells and we come back down here, if we start to create a support here, this is a great buy area because it's essentially repeating what happened here. And then once you finally have enough order flow to break above the previous highs, you have an extended run to a new high. right? What, we got some crypto mans in the chat. I don't know. I don't know why people who trade different markets compete with each other when we're not your enemy. You know what I mean? Like you're just trading a different trading instrument. You're not special. It's just like there's guys who trade corn who make more money than you, who trade corn futures. So like, how's that make you feel? You know, you're trading. You think you're so fancy and innovative trading crypto, and there's some OG out there trading fucking oranges, and oranges, crude oil, and corn. He's making millions of dollars. All right, so everybody's trading everything. There's no reason to chirp somebody trading a different trading instrument because some guy's gonna come out like Clement said with his wheat futures profits and then slap you with some reality. You know, everything's traded. Every single, and this is a question I've asked to my private chat before, and I'm gonna ask to you guys now. It's a good thought provoking question. All right, name me anything in our modern world that is not traded or monetized. Anything. Somebody try to name me something that is not monetized in some type of way or fashion, either through the physical product itself or a service, right? Humans are greedy and corrupt as fuck. Everything. So air is monetized. Canadians have sold air to China, you know? Toe picks for sure monetized. Protein Paul was monetized for a bit. He, anyways, while you guys answer that thought provoking question, I'm gonna continue here on EU. All right. So EU, we have a risk currency against a safe haven pair. So with the overall market optimism, we've been having continuous upside moves with consolidation phases that don't break previous lows or market structure and significant areas we're going to identify. And then once we finally break those intraday highs, we have continuation moves to the upside, right? So now what I am paying attention to on EU is this low point. A lot of people might say EU starting to enter a sell-off because we're failing to revisit the previous highs. But at the end of the day, it's just consolidating and generating liquidity. And until we have a shift in the higher time frame structure or a fundamental fear catalyst, then I have no reason to be in a higher time frame or long-term EU sell bias. Yes, potentially overnight, maybe EU, if we have US dollar strength, can come to revisit this demand area in previous lows. But what I'm primarily looking for is if we do come down here again and fail to break, and we still have Euro markets optimistic and bullish when we're looking at our global stock markets and their overall structure, we still have the US dollar on the higher time frames relatively bearish, then this is a great buy area on EU, again similar to what we saw here. Just like when EU peaked these previous highs, you have the transaction when a new high is created that buyers exit positions because they're going to exit out and they want to go reap their rewards, like I said many times. So when they exit positions and sellers jump in hand to relieve them out of the market, this is what creates consolidation phases or pullbacks. A technical consolidation is essentially just an order block or liquidity zone for orders entering the market to continue with the overall structure. So in this situation, we had a high printed, and then we started to enter a consolidation phase where we failed to break these significant lows. And then you can see buyers jumping in. And as soon as you break above those previous highs, you have an impulsive stretch to a new high, right? And sometimes this consolidation phase can be a couple of hours long. Sometimes the consolidation phase can be a month long. Sometimes it can be months long. I've seen GJ in 2019 consolidate for the entire month of November in a 30 to 40 pip range. That's not up to us to try to guess or determine. It's up to us to stick to a bias and to stick to that unless there's anything to shift that structure or bias. So it's not hard to see that EU is bullish. It's not hard to identify that buyers are continuously printing new highs. And at these new highs, we start to get a consolidation or a pullback as they cash out of the market. And it's not hard to see that we still haven't broken this structure yet, right? So higher time frame bias on EU, similar to any other risk currency against safe haven pair, is still in a bullish bias, okay? But what we can start to see here on the intraday time frames is exhaustion. So there is the potential for EU to revisit this demand area in these previous lows, especially because why? Don't forget with some of our key fundamental points here that it's still early into a new fresh month. There's higher probability, the higher time frame the candle, the higher probability you're going to have a significant wick created. So if you just want to go quickly technically backtest any main pairs, you're going to see at higher probability, especially with like your monthly, weekly, quarterly candles, 3 month. There's a strong potential of a significant wick being created to set up the order flow for pretty much the rest of the month. And you'll see a trend for the rest of the month if you have that volatility in favor. So what I'm pretty much looking for is, even if EU comes down here to 1.967 on the monthly time frame, that would still be maintaining overall bullish structure and creating a bit of a more significant lower wick, and then potentially flipping bullish with more buys in the market. Even similar to like here, you had this impulsive move and you had a pullback. Impulsive move, pullback, and then continuation up, right? Okay, just everybody just watch the 30-minute candles that just opened up, and keep in mind that we still have actual London Open at 3 a.m. Eastern. I just wanted to quickly go over that higher time frame bias for EU. But now, obviously, with all of our key levels and everything mapped out here, we can't deny the exhaustion at our 1.21 key level and the rejection there, and as well as the reactions at this 1.2046 zone on the lower time frames and intraday time frames. So this is the trade ideas for potential scalps on EU, right? One, this is a bit of a messy lower time frame range, but if we have standalone US dollar strength overnight when we're watching Dixie, so when we zoom in and watch the dollar index, which is just pretty much essentially the US dollar standalone, if the dollar continues bullish overnight, and if we have a lower time frame technical break below this medium zone at 1.2045, there is a nice sell range down about 25 to 30 pips to the next medium term zone at 1.2015. But that would only be if we break below this area, where you can see on the 1 minute where we've had a ton of bounces. But what I want to identify so far is that the bounces are starting to get significantly smaller and smaller. So if we were to test this area again and break, I would see a lot more sellers momentum and pressure to give us that squeeze down. So if we have US dollar strength, and if we have EU specifically break below on the 1 minute below 1.2045, sell scalps down to 1.2015. I'd only be looking for buys if we can come back above our 1.21 key level, or if we really start to create a flat candle body support here again and fail to break here again, like how we've seen multiple times here. Like if at London Open, we do another price grab here and we don't break, then this is another potential buy bounce area, you know? So we're going to be watching the US dollar for that overnight, a very key decision point we're coming to in the intraday time frames that we're going to be watching at 1.204 alongside the lower time frame price action. Yeah, let's just check some of our headlines to the left here. Gold, further gold entries are not until we break out of 1721. All right, so we've already had this buy play out at 1715 and 1716. that played out up to 1721. I know a lot of people in the chat caught that, but I'm not looking for further buys. I do like this, to be honest, this flat candle body support, but I'm not looking for further buys until we break out of 1721. If we can validate this little flat candle body support and come above the key level, 1721, we'll see another impulsive squeeze to the upside, you know? If you want to see any of the trades or stuff I've taken or any of the analysis from before, just go to the Capital Hungry free analysis channel and you could see the trades I've taken since 2019 and scroll down for a year if you want. You know what I mean? Or 2 years now. It's 2021 now. But yeah, you know what I mean? I'm not one to keep flexing all the time, you know? Fuck is this? Oh, it's your story? Nice. Yeah, so further, if you guys want to send charts, don't be shy. So EU, we're going to be watching this area in the range that we're in right now and key decision point at 2045. Now UCAD. So remember I was telling you guys that where could be sells on gold now? We aren't really looking for gold sells. If you want to see the gold, our gold buy, our gold analysis, then just go towards like maybe 30 minutes into the stream, probably a bit earlier than that. I know one of the members or the people in the chat will be able to tell you. We've primarily been noticing the exhaustion at previous intraday lows, the break out of this bearish market structure that's been respected for a day and a half now, and then the support created at 1715 key level break and retest to take these buys up. Now we're waiting to see what London Open brings. If we either get another pullback to 1715, fail to break for more buys, or if we just have some more buyers momentum and we break above this 1721 price point to give us another squeeze to this medium zone around 1727, where we've seen reactions here before, right? So the initial buy trade, most people already took and cashed out of that or are holding runners from early in the stream at 1715 and like 1716 at this little support that was being created above the key level. Once we validated this exhaustion at the lows and sellers exiting positions and buyers momentum increasing, the increased buyers momentum was assessed with the break out of the bear structure. So when I see a break out of the bear structure, it's showing me more buyers are entering the market and sellers are starting to fade out because we're starting to break above that little previous high point, right? For an extended period, you're trending like this until you start to get exhaustion at lows and you're no longer printing new lows. So when you stop printing new lows, besides this little liquidity grab, this was way too quick and it snapped right back and like I'm just looking at this zone pretty much, right? Because that's where previous intraday lows were as well, right to the left there at 1707. Okay. So when you have this bearish trending market or bearish lower time frame structure, what you're looking for is continuous lows printed. If continuous lows are printed, you don't want to start buying dips for no reason or start going against a trend. But as soon as you have a pullback and then you go to revisit the previous low, but you don't break that low, this is what starts to show you potential sellers exhaustion and sellers starting to slow down because you're failing to create a new low. And as soon as you break that structure is what shows you a shift in momentum, right? So that's what we were pretty much taking advantage of on gold at the start of the stream with this. When we start to zoom in here, and obviously you guys see the exhaustion now at these lows, and this happened. Obviously we're on the 1 minute time frame, but these price points are higher. Like these white lines on gold are quarterly, 3-month, yearly, and 6-month levels, historical levels. And this is like previous intraday low price. So we're watching lower time frame price action at higher time frame significant price points. Do you understand what I'm saying? But anyway, so we were watching that we had this exhaustion and failure to break those intraday lows again, and then we started to break above the bear structure and above this previous high, with also seeing impulsive buyers candles and then this pullback to retest this area, which is this previous high, and failing to break. So we took this buy to the upside to 1721. And you can see the reaction at the next historical level. Right? Now, with the new 30-minute candle And the rejection at 1721, this was a great scalp up from 1715, 1716, but we don't have validation to extend buys or take further buys until we break above 1721 now, where we can at least go to revisit these previous minor highs, which even that is another 30 to 40 pip impulsive move to the upside. And what we want to target is 1727, which is a 60 pip range to the upside. We could still get a pullback here to 1715 for London Open, and then see and then assess price action accordingly. And I'm only looking for gold sells if we finally clear those lows and those intraday lows, and especially when you're looking at like the hourly and the 30-minute time frame of where the actual candle bodies are closing. So never mind this aggressive wick, right? Look at the actual candle bodies where they end up closing. It's in this area. And you guys have to understand, whoever's coming late, that we've been taking the gold sells for the last 2 weeks, but when gold is playing in this higher time frame corrective structure, every time a new significant impulsive low is created, you have sellers exit the market and you have a pretty aggressive buy bounce. So now that, yes, we were taking advantage of these sells, just like we were taking advantage here with the market structure, right? Or even the buy bounces up, because gold has just been in this higher time frame corrective structure with the overall market optimism. I can't feel confident taking further sells unless we clear these lows. Otherwise, I'm going to see a potential reaction like we've seen here, because gold's been behaving like this in this corrective structure since August 2020, ever since we peaked those 2075 highs, and a lot of the market fear has been priced in. Right? So for us to see a potential repeat of what we've seen here, and I was explaining this before, but it doesn't hurt to explain it again, where you had this bearish market structure respected, sellers impulsive moves, consolidation, seller impulsive move, consolidation, seller impulsive move, right? You at a new intraday low and a new impulsive low compared to the previous low, sellers exit positions, and now you start to notice more buyers impulsive moves and a break of that bearish structure, and buyers jump in the market, right? And you see the same thing here. For an extended period of maybe a week, you had this bearish market. Don't mind the line. It's just to highlight that for this period of maybe a week, sellers were in control, and we pushed down to a new impulsive low until we broke out of that structure, even retested that order block high, then continued up. And you have to understand, this is like 500 pips of upside. Right? So now, guys and gals, what's different here? As a new intraday impulsive low, this was the previous low. We've cleared that by a significant amount, almost 600 pips below the previous low, right? Sellers have been running this seller's run from these highs, scaling in, and now we're at a new impulsive low. We do have the potential for sellers to exit positions, and if when we zoom in here, if we get the repeat of what we've seen to the left of how gold has been behaving in this structure and at these new impulsive lows, and we get a break of this bearish market structure and a break of these candle body highs, what do you guys think is going to happen? Right? That's why, yes, for the last couple of weeks, we've been taking advantage for the sells, but I'm no longer confident in taking further sells unless we broke below 1708. You get what I'm saying? Does that make sense to everybody? I don't have to repeat some things, but hopefully it gets into people's heads, and then things start to click. Sparks start to go off, and you line up the fundamentals with the technicals and the timing of fundamental catalysts and events. Yeah, so that's why I'm being very iffy about trying to take further sells here, and I wouldn't be confident in taking further sells. I'm only confident in taking sells at two spots. One, if we come to 1739 again and fail to break, or two, if we come below 1708. All right. Otherwise, even like how we're moving now, we're having a bit of these stronger impulsive moves, these corrections, impulsive move. We have a bit of a correction here, impulsive move. Yeah, GJ struggling at 0.500, but keep in mind that it's not even London Open yet, right? So um I would get out of GJ buys if you're in at 0.500 right now, and I think it'd be best to wait for an opportunity through London Open. Let London Open open itself. Let that hourly candle potentially grab liquidity in a lower wick. GJ, as long as we maintain this lower time frame bullish market. So same thing with GJ here. Look at GJ with that, what I'm talking about with that structure. See how GJ, after we peaked these new highs at 150.5 on the intraday time frames, we started to have at these new highs buyers exit positions and sellers jump in hand to push price down to a better demand area for buyers to re-enter the market, right? So now on the lower time frame, we identified that shift in the structure by watching the bearish market structure that was being respected on the lower time frame since that 150.5 sell off. You can see from that 150.5 sell off, this bearish market structure was being respected until we had this breakout. So when we're looking at GJ, as long as GJ is above 149.2, 149.5, I'm in a bullish bias. I would only be looking for GJ sells really below 149. Anything above that, I'm still in a bullish bias for us to slowly creep up and go back to revisit these previous highs. All right. Euro USD, we're watching this area at 1.2045 as a significant area we'll be watching. So even if we do a bit of a pullback here to 149.2 at London Open, then I'm still in a bullish bias if we hold that area. And then if we come back above 0.500, right? Because GJ has been doing some more aggressive pullbacks and hasn't been showing as impulsive candles. So you can't be surprised if it slowly makes its way up like this to revisit these highs. You feel me? All right. So remember, guys, remember what I was just teaching you guys about how the market optimism is impacting risk currency against safe haven pairs. So, what type of market structure is that optimism printing on risk currency against safe haven pairs? What type of trend technically do you see from this fundamental optimism on those risk currency against safe haven pairs? Your GJ, your GU, your Euro USD, your Euro CHF. What was the main trend you guys were seeing across the board? World's trending. Thank you. Bullish, right? When we were looking at those various risk currency against safe haven pairs, the primary structure on them was bullish. So now, how do we validate those confirms fundamentally that it's really true that market optimism leads to risk currency strength, safe haven currency weakness? Look at US dollar against the Canadian dollar now. What's the structure on this? What's the primary trend in structure on the US dollar against the Canadian dollar? It's the inverse. This is literally the exact flip of like GU or EU or GJ, because what do you have first in this currency pair? Do you understand what I'm saying? It's here you have the US dollar as the primary, the Canadian dollar as the secondary. The first in your currency quote is the safe haven currency. The secondary is the risk currency. The other pairs we were looking at, it was the inverse. So we're seeing the inverse market structure that's been printed on USD CAD ever since the COVID crash. It's the, you know how GJ, remember when we were looking at GJ or our risk currency against safe haven pairs? And during March, they all crashed down and then ended up trending bullish like this? Pretty much, right? US dollar against the Canadian dollar is literally the exact inverse of that, right? During the start of March with the COVID pandemic fear, US dollar against the Canadian dollar spiked up. Why? Because with economic fear and uncertainty, safe haven currencies get strength. Then, as the markets got optimistic, it was the inverse. Money went out of the safe haven currencies, went into the Canadian dollar. So we had this bearish market structure printed since then. Continuous lows being printed with lower high pullbacks that respect the bearish market structure. So on the higher time frame, this area is a great sell area for us to revisit these lows and continue down as long as markets remain fundamentally optimistic. And we can see even with the new month so far, the new monthly candle did a pretty aggressive pullback, but it didn't break the bear structure still. Does that make sense to everybody? Is that clicking more like, is that sparking more thoughts in the head or no? Right? So, with that being said, with the market optimism on the US dollar against the Canadian dollar, I'm primarily in a bearish bias. We've been primarily playing the pullbacks to retest structure and key levels and sells. Any analysis that I've sent to the CH private channel is either the higher risk sells at like the retest of structure and the key levels, or the safer sells once you clear a previous low. Higher risk sells at the retest of key levels or structure, the safer sells once you clear the low. That's it. We haven't primarily been looking for buys. I know some people play the counter trend buys because we have nice reactions at the key levels, as that's primarily where our lows get created. Like, look at these key levels. They're cheat codes across every pair. They're cheat codes. So some people in the Capital Hungry private chat play those buys because they trust the key levels for their historical support and alongside price action and just the way the market waves behave. Like, as a new lows gets created, you will have a pullback. You know what I mean? So when we're looking at the US dollar against the Canadian dollar, as long as we don't break above 2693, if even if we retest here, great high risk, high reward sell area. Intraday time frame, safer sells is below 258, and the safest sells below 25. Did you guys take my advice and stay out of GJ? I always give you guys good advice, man. Who got out of GJ when I said? So you don't have to deal with this little mess. Huh? I give you guys good advice. I got good instinct, you know? But yeah. So for the US dollar against the Canadian dollar, nothing. It's just coming to London Open and stuff, right? We're already expecting these pullbacks. Good job. Good job. Yeah, we're waiting until London Open, anyways. You know, that's why I said everybody. I think you should get out for now. Yeah, this was good. Hopefully, you got out as well, right? Like before, we're getting that aggressive pullback. I'll tell you guys when to send your charts in a second. All right, just let me. So USD CAD, we understand. That's all good. Just let me go over the washroom quickly, and then right back in 5 minutes, send all your charts, and I'll go through them one by one, and then we'll watch London session open itself, and we'll see what trades we can execute on gold, GJ, GU, and Euro USD. All right. I just was drinking a coffee, and I'm a little bit sick here, so I've been drinking a lot of fluids. I gotta fucking drain the main vein, you know. London opens at 3 a.m. Eastern. How do you guys not? Never mind. I'm not gonna be rude to anybody. I'm trying to be nice. I'll hold my tongue. I'll be back in a minute here. All right. I'm back. Guys, don't forget London Open coming up. Don't forget your mental reminders as a trader. Primary goal is to survive in the markets and protect our capital and follow strict risk management in our trading plans. We're not gambling here. We're not trading based on short term satisfaction and pleasure unless you're a simp. So be a man, be a strong woman, or just be a woman. I don't want somebody to take offense to that. And, handle your shit. So just that quick little mental reminder as we're coming into London Open in 3 minutes. GJ back above 0.500, but let's just wait till London Open. Yeah, I'm gonna check out your guys' charts. Gold, GU still playing in this range, rejecting that zone with potential still short-term dollar strength. We might get our EU sells as well below 2045. Yeah, let's just see how London opens. I'm gonna check out your charts in a second here. Gold just doing a pullback here. Those initial first buys from 1715 and 1721 played out very nice. But now we're seeing what London Open brings for a potential pullback. We'll see how these hourly candles are closing across the board. Still a potential bullish candle close, but it is weak below these previous candle body here on the intraday time frame. So oh, what the hell? Why did you take a buy at the high there? One second here. All right, sorry, I accidentally yanked my mic wire. Okay. No, I'm not roasting anybody. All right, what's going on here? London open right now. Let's see how this hourly candle closed. Still nice and bullish. We already got the retest of 0.500 quick. So let's see if we hold above 0.500 and continue the bullish momentum. Gold, hourly candle, how'd it close here? And I'm going to check your guys' charts in a second. We still got a bullish candle close. I like how this hourly candle's already created a significant lower wick. If we can break above 1721, we can take those further buys to the upside. Because it doesn't look like we're going to get a 1715 retest so far, but let's just watch price action accordingly. I want to see the reaction either at 1715 again, or of course above 1721, where right now it looks like we're in this bit of like corrective minor pullback structure. So I feel like once we can break above it, we'll have another like impulsive squeeze we can take advantage of. But right now, nothing too crazy to execute on there. GJ, nice reaction at 0.500, but we're still having a bit of struggle at these 1 minute highs around 600 area. GU, we're only taking buys above 965. EU is still in the range. UCAD, we're only taking sells below 26300. All right, let me check out these charts. Sorry. Yeah, I had a couple questions about this. My first question, sir, and then you guys can send your charts after. Don't worry, like we're still going to be watching the markets through the next couple of hours. So if you don't jump in, like you don't have to jump in a trade right away or start to get so antsy and your heart racing right at London Open. Like slow down, take a breath, relax, analyze and assess the markets and what's going on, and then wait for high probability setups, you know? So just relax. All right, so one thing I want to address here is that you yourself said that this is a daily and 4-hour resistance level, right? So this is a previous high that we already rejected to the left. This is a daily resistance level you have mapped out. Why did you take a buy up here? You know, I'm a little bit confused about that one. Just because you identified yourself that this is a resistance level. You could also see the rejection here previously to the left. Yeah, this seems like a very late, almost like a FOMO type of entry. It seems like you missed your entry in zone here, and then you're trying to enter at the high. Yeah. To be completely honest with you, very bad trade. Just to be like honest with you, so you can improve from it. I would recommend that next time you're trying to buy at a high, you wait for some clean candle closures above that resistance area that you already have identified, or you'll be entering at the pullbacks or supports, so you can ride with the buyers instead of trying to jump at the highs, you know? What the hell happened to my chart? What the hell? Am I tripping? Oh. Holy. GJ 0.500 buys. You guys are up 16 pips. If you guys took those, you guys in those 0.500 buys? You guys are up 16 pips if you guys took those 0.500 buys at London with the break above 0.500. I would personally, as a scalp, secure some partials and then leave runners risk free to 0.800. You know, just to secure a bit of profit to protect yourself, so you can relieve some stress, so you can set your other trade risk free. Then whatever happens, happens, you know? But that was a nice little 1 minute play there. 17 pips from the 0.500 point. What we do want to target 0.800, but I'm just saying, as a scalper, for that quick impulsive move to get 10, 17, 10, 15 pips to protect yourself and secure some positions and then leave risk free doesn't hurt, right? But I want to keep continuing to the upside, obviously. GBP USD, nothing to execute above 365 yet because we have that indecision with the US dollar. It looks like this dollar candle at London Open pushed down first to grab liquidity and can potentially continue bullish to the upside. So that can potentially give us our EU sells if we get the 1 minute break below 2045 to finally give us that like 20 to 30 pip squeeze down to the next medium zone, you know? Yeah, I'll check out some more charts, no problem. Yeah, like another opportunity obviously would be if we come above 149.8. We're getting aggressive pullback here at this previous 1 minute high as well right now. That's why I advised as scalps for people not to get greedy and at least secure some partials at that initial impulsive move, because why not, right? Okay, this is Euro against the British Pound, Euro GBP. I like how you have identified some bearish market structure. I like how you have identified this new low that's been created in some of these consolidation zones. High risk, high reward sell. I like how you're identifying various risk threshold trading opportunities. Like if we still reject this area for a higher risk sell, because your confirm is essentially that we just continue to respect the bear structure. Gold going for the stop losses of who? And this obviously safer sell option makes sense to revisit these previous lows. Yeah, as long as we respect this bear structure and we break below this little order block to the left and below this zone you have marked out, then a target to these previous lows makes a lot of sense. What are you guys spamming? Gold bearish, this like, what do you guys talk about? There's not even another entry on gold yet. The gold trade was 17.15 to 17.21, and then we got out. The strong reactions at 17.21. Now we're watching how this hourly candle is potentially setting up. If it's just gonna melt down or if it's gonna hold at the 17.15 key level, and we'll see how it reacts there. You know, guys are getting very antsy. I've been looking at gold, selling gold before you came here. Nice. Do you want to share some analysis? We were riding buys from like 1708, the high risk. 1715 was the key play, up until 1721. Then most people cashed out with the strong reaction at 1721, because we're still watching this break out of bearish market structure and the rejections at previous lows, as well as the fact that we've created new impulsive lows as well on gold. So I wouldn't feel safe taking sells on gold unless we came below like 1708. But I've already discussed that analysis a few times now. Yeah, those buys were like pre-London hour. Those gold buys, that was early in the stream. GPJPY. Yeah, I'm sorry, I was just reading some of the headlines to the left. Yeah, I feel you could have gotten the buys like your 10 pips um at like the 0.500 area, but I still like what you're looking for and how you map that out there. What do you mean? Isn't the Yeah, this is what I've been watching as well. That's the same thing, but I was watching this structure more zoomed in here, you know? But yes, I was primarily just watching it because it lines up with the 1721 key level. But what you're looking for the safer buys makes a lot of sense as well. Yeah, May, that would be safer if we had that secondary break above 0.800. Sorry, I'm just reading these headlines to the left to see if we have anything really impacting us because we have a couple of Euro speakers here, but nothing too crazy so far to start off the night, you know? Yeah, I like that. Yeah, I'm still checking your guys' charts out. Sure, no problem. Gold, I'm still watching how we react at 17.15, or if we come back above 17.21. GJ just ranging around now. It looks like still we're still above 149.5, but you can see we're having rejection at these previous 1 minute highs. So you don't have any validation to extend your buys unless we break above there, and then we'll obviously extend to the next PPL, which is 0.800. Yes, sir. GBP USD, very messy. No real entries or much going on. Euro USD, we might get our potential sells, but you see how on the 1 minute time frame we can see the reactions on the dot exactly again in this area. So you can see we haven't had any clean breaks below the zone yet for safer sells. So let's watch how we react here if you're looking to take an EU trade, because we would still need that melt below 2045 and continued dollar strength where we need dollar to break out of this little candle body range, and then that would validate those EU 30 pip sells down to 2015. Other than that, we might have another pretty aggressive bounce here as we've just been ranging in this area. So let's just watch that accordingly. If we get that break candle though below these little candle bodies into and the zone we have marked out, then it's a nice trade down. But let's watch how we react at this area of price sensitivity. Yes, yes, sir. Let's check out your chart. Euro NZD. So, what is this? The hourly chart. Okay, I like how you labeled out your market structure and some key price points that you are looking to execute from. So I do like how we're respecting this bearish market structure, how we failed to break those previous highs. And I do like how you identified this little order block and the bullish market structure as we're in this pretty much wedge squeeze. Pretty much though, once you break below 1.65 here, this is a great target straight to those previous lows, right? Because with the overall bearish structure. I didn't recommend any gold sells. Just a couple of people in the private chat took gold sells because they're used to trading the 1 minute, and because of the key level reaction at 1721, they scalp the gold cells. Like most of the people earlier pre-London took these break and retest 1715 buys up to 1721, and then a few other members. I didn't recommend the sells. I'm primarily in the buy bias on gold still. That's why we took those earlier higher risk buys in the 1715 buys. But other members saw the rejection at 1721 and took some of those scalp sells down. But that was pretty much just at the rejections at 1721. But that was not a trade that I recommended or suggested. So but if you're just asking for future reference, it's very similar to how we are looking at the support being created at 1715 in the lower time frames, except you can see the price action rejection candles when you zoom in here. This bullish candle, right? It's very strong, but you have four very weak candles showing buyers are slowing down, and then an impulsive candle to correct that, and then this bit of a resistance formed, right? But I'm still in a bit of a buy bias anyways. Gold is just pretty much ranging between 17, 15, and 21 so far. Yeah, no problem. Yeah, GJ is just starting. GJ gave that nice quick like 15 pip play just for a scalp with the volume, but okay, gold weekly. Man, just put a line, eh? You just put a line there. No, I'm kidding. This why don't what? Am I missing? I can't read every single comment every single second. What are you talking about? Ask questions. You want me to ask you guys questions? Yeah, but anyways, I was primarily watching, obviously, this bullish market structure overall and how we're in that deeper corrective structure as well. But why do you see 1565 as a buy zone? Is it because of like this price sensitivity here and bounce we've had in this area before? He wants the bond yield thing. I thought Timbuktu already answered that like twice, three times now. I thought he already answered that question. I don't even remember the question either. Sorry. Oh, what is the best time to trade US 30 in gold? Well, you have to understand that the markets are always actively moving, right? Like there's always liquidity moving through the markets, no matter what the currency is, what the trading instrument is. Banks and institutions, market makers around the world trade every single respected trading instrument. They don't just trade what their country's currency is. So essentially, with that logic, any real session period is good to trade gold or US 30. But for US 30 specifically, obviously, the primary volume is going to come from NYSE Open during New York session when all the volume is entering the stock market, right? So that's when you're going to see some of the strongest moves, and well, higher probability of seeing the strongest moves. But you can trade any pair, any currency, even if like how some people think like, oh, the currency is closed, it's not going to have much movement. It doesn't work that way. There's always liquidity moving through every single trading instrument, pretty much 24/7 around the clock, with all the different participants in the market around the world. GJ's just messing around here, not too much. We still need to clear above these 1 minute highs and we can hit that 0.800 target. GU, nothing good. Um, EU starting to create that flat candle body support for a potential bounce here, like we were talking about, as we didn't break below. And we saw these reactions here multiple times. How do you deal with anxiety? You sort of just accept it. Any negative emotions, I just primarily um accept. And like, how can I say this? I try to view myself whenever I'm feeling an emotion that might be difficult to deal with from a bird's eye perspective and a bird's eye view, and say, and just ask yourself some questions about, what am I feeling right now? Why am I feeling this way? Is there a way to identify why I'm feeling this way? Okay, I can be self aware enough to understand I'm feeling this way. I might be a little bit anxious. I might be a little bit depressed, etc., etc., right? So once you can establish that you're feeling this way, and then you can normalize it and go, this is a normal feeling. At the end of the day, it is just chemical reactions popping off in my brain. Sometimes I'm happy, excited, energetic. Sometimes I'm depressed. Sometimes it might be more. Sometimes it might be one more than the other. But as humans, we are meant to feel every emotion equally, in my opinion. I think our modern society has really created a snowflake generation. And alongside depression and anxiety, all these kids in newer gen are getting pushed straight to medication, like straight to Xanax, straight to like antidepressants. You know what I mean? ADHD medications, shit to focus, shit to sleep, shit to relax, shit for your anxiety. And that's really the shit that's going to really fuck up your chemical balances in your brain and cause long-term issues, right? So at the end of the day, this new snowflake generation and the modern world, because they're so addicted to impulsive satisfactions, dopamine hits, right? Impulsive satisfactions, dopamine hits, and convenience. Nowadays, you can get any type of dopamine hit at your fingertips. You can get some dirty junk food and order it right to your door. You could go watch porn and search that up right away. You could go get some drug or alcohol and abuse that. There's so many convenient, fast satisfaction dopamine hits that completely pollute people's brains and puts them in this zombie state, right? So the first thing I want you to know is, when you say how do you deal with anxiety, just like how you deal with happiness, it's just an emotion, right? It's just a fucking emotion, just like depression, just like happiness, excitement, anxiousness, being shy, being anxious. It's just an emotion that once you identify it, once you know how to deal with it, and sort of just accept it, you can move forward. So pretty much, I'm just self-aware enough to go, hey, I'm feeling a little fucking depressed today, but I still got shit I gotta do, because that is what builds your character. Anybody can work hard when they're feeling happy and they're feeling good. What builds your character, discipline, and just your mental fortitude is still doing that hard work when you're feeling like shit, right? That's what really builds your character. That's what really pushes you. That's what really gives you a sense of accomplishment. That everybody else is depressed. Everybody else is crying. These guys are all taking pills. Fuck that. I dealt with it, and I got work to do. You know what I mean? Instead of taking this pill, I'm gonna go to the gym. Instead of crying about it and scrolling on IG for hours, I'm gonna completely revamp my diet. And trust me, revamping your diet and all this shit, it's not expensive. You know what I mean? You could eat just chickpeas and chicken, or just rice and chicken, or just chicken and potatoes, and that's it. And really clean up your whole fucking body and mind, and while you're working out, exercising. I feel every single human should be constantly trying to be better than they were the day before, even if it's 1% better, right? This is what gives you a sense of accomplishment. This is what gives you a sense of self-worth. This is what gives you a sense of value, right? Without that, look, think, and you know what's the biggest, I don't know if paradox is the right word. You know what's the biggest mind fuck about our modern generation is that you have all of these dopamine hits readily available at your fingertips, that gives people short-term happiness, right? We have that more accessible than ever in history. True or false? You could like we were talking about the how you could order junk food in a second. You could get drugs. You could go get alcohol, no problem. You could scroll on toxic social media for hours. You could like just you know what I mean? You could go on porn. That's all accessible and has been more accessible now than ever, but we are in the most depressed generation I think in the history of life. So with all of these short-term satisfactions right at our fingertips, why is everybody feeling so fucking doom gloom? How can we all have this sort of common lingering feeling of like just like sadness that we can't answer? That's like just lingering about, that's just lingering there that nobody can sort of get an answer to. It's because the whole society has been brainwashed. They've been polluted to think that these short term satisfactions and dopamine hits are true happiness. It's not. In my opinion, true happiness is going to come from improving yourself mentally, financially, spiritually, right? So that's all I mean for there. You know what I mean? But yeah. So when you feel depressed, when you feel anxiety, don't deal with it like how the mainstream media is telling you to deal with it. Just deal with it like any other emotion, assess it, say I'm feeling this way, but hey, I still got shit I got to do and power through it. Cuz at the end of the day, you control your mind, right? And at the end of the day, this system and the financial system, the divided keep them weak, keep them mindless, and keep them as livestock on a farm, right? Listen, I'm all about spirituality and faith and possibly believing in something more after life, whether it's an energy, whether it's vibrations, whether it's a God, right? But I do not like religion because religion is the monetization and the business and creating a business around spirituality and faith, right? I'm all for knowledge and all for learning and enlightening yourself and growing your knowledge. But I hate the education system because the education system is the monetization of knowledge, right? I'm all for the foods of the world, the different fruits, vegetables, and foods that come from the earth. But our modern food system is designed to fatten you up, make you sick, make you slower. It's all sugars, it's all heavy salts, it's all bad for you. It's all designed to make you addicted to the food and keep buying it. It's capitalistic. You know what I mean? That's why I don't give a shit about That's why I don't give a shit about religion. I don't give a shit about racial divide. I don't give a shit about like social justice issues or gay shit or lesbians or trannies. I don't care. I don't give a fuck about any of that. BLM or social or feminism or even if it's my own country, like you know what I mean, dude. I don't give a shit. All of that to me is all just noise and nonsense that is distracting the masses and keeping them divided from the core issue, where the core issue is that 1% of the world controls the 99% of the world. They control their wealth, their resources, everything else. They control their decisions. They control the dollar that you work for, the dollar that you pay for something, everything, right? At the end of the day, the dollar that you slave away for is controlled by a central bank and it goes down the line in that sense. You slave away 40 hours, 60 hours a week for this dollar. BLM, all that shit's the same. All those movements is the same shit. It's all the same shit. I don't care. I don't care if you feel some type of way of it. Your mind might be too narrow minded right now to focus on the core issues and see past all that nonsense, right? I don't disrespect any other person from another country, but I don't like all these different social groups or these different ways to keep people divided and keep milking them and keep making money off them, like religion, like government, like all these different social justice issues. I don't care about it. To me, it's all noise and nonsense. to keep people distracted from the real issues. That's all I mean. You know what I mean? But anyways, back to like the mental side for the person who's asking about anxiety. When I think from that perspective, anxiety doesn't really impact me anymore, you know? Every emotion is meant to be felt. So when I feel emotions, I openly assess it and say, "Hey, I'm feeling this way," and that's okay. I'm not feeling 100%. It's just chemicals in my brain. I still got a goal that I'm fixated to that I have to work towards and put time and effort into. I don't care if you're black, white, Chinese. Chinese people have dealt with oppression. Indian people have dealt with oppression. Every single race has dealt with some type of oppression. You know what I mean? Black people, maybe theirs was in media more often. But I don't care about any of that. I don't care. It all comes from core issues of human corruption and greed, and always a small percent of humans controlling the majority of humans, and humans taking orders from other humans. So I don't care about the nonsense or the noise or the hoopla or the Mickey Mouse shit. It doesn't impact me because I see past all that, and I can see the real evil at hand that's controlling the world that everybody else is ignoring because they're too busy protesting about like something like BLM or protesting about some other riots or this or that. So sorry. You know what I mean? If you don't like it, then you have your opinion, I got mine. But mine is backed by economics because this is how the financial markets in the world work. This is how money goes from the central banks down the line. Most people don't even know that the dollar they work for 40 hours a week, 60 hours a week, they don't even know where that dollar comes from. They don't know what it's backed by, what's printed. Everybody has a choice. Everybody can make their own choice. Nobody has to work a 9 to 5. Nobody has to go to school. Most people are conditioned to think they have no choice there. But everybody has a choice. It's a personal risk. Everything in life is risk versus reward. Everybody can choose their own mindset. They can choose what they want to think. They can choose what they want to pursue. Every single human has the equal opportunity of this personal choice. Their circumstances might be a lot harder or different compared to others, but that's just life. There's a billion there's 7 billion people doing 7 billion things. You're gonna compare everybody's struggle or story? No, you're gonna focus on what you can do with your life, right? And what's the common theme? What's the common theme beside between every religion, between every race, no matter if they hate each other, between every country, between every government? What's the common controlling factor that controls them all? Money. Right? That's the common denominator. That's the root. And that's the root and the common denominator between all these various groups, all these various movements, all these various countries, whatever, right? But, but 99% of people don't even know where their money comes from, what it's backed by, how the value is dictated, how it works. Think about that. But they slave away 60 years for it. No problem. You don't see an issue with that? Nobody sees the issue with that. Go to any person on the street or a random person in your country. If you're from Australia, ask them who the governor of the Reserve Bank of Australia is. If you're from England, ask them to name members of the Bank of England or tell them what that is. If you're from the US, ask them, "Hey, do you know who Jerome Powell is?" And watch how many people cannot answer. And they'll be working for that dollar that's controlled by these people in a sense for 60 years until they retire. You guys don't see an issue with that. You know what I mean? But yeah, I like to have these little rants and rambles once in a while. It's interesting and fun, you know. All right, what's going on here, guys? GJ gave another nice bounce off 0.500, but we're still just ranging as we're failing to break these 1 minute highs for now. What time is it, guys? Oh, this is a new 30-minute candle. Let's see how these 30-minute candles are running. We're still bullish, still respecting bullish structure, just we're just starting to slow down a bit here, showing a bit of exhaustion at these highs. I think if you caught those initial like 10, 15 pip scalps, it's best to just stay out now. Even gold's just starting to range a bit now. We didn't get that clean retest to 17.15. We didn't break above 17.21 yet. We are starting to create a bit of a flat candle body support where if we break above this bearish candle, I'll see higher potential for us to go up and break above 17.21. Not everybody has to be a trader or entrepreneur, but the world would be a lot better and a lot happier if people constantly push themselves to be better in any aspect of their life, physically, mentally, financially. I'm not saying when you have to improve your way of life financially or physically that you have to make millions of dollars or hundreds of thousands of dollars. I just mean pushing yourself to do a bit more, because there's in this life, through the entire history and existence of this life, nobody has ever known our purpose here. It's just been through human nature, humans controlling other humans, but nobody's ever known our purpose here of what we're supposed to be doing here. So in that sense, like, you might as well push yourself to the limit, because why not? What else are you gonna do? Otherwise you're just gonna work till you die and then just be like, you know what I mean, doing some regular ass shit. So why not push yourself a bit more, or go after something you want, or do something on the side, or push or try to push your limits mentally or physically or spiritually, expand yourself, whatever it may be. Why not? Even if it's bit by bit, you can do it at any age, you can start at any body type, any mental state. Why not? And if you have a collective society pushing themselves that way, you're not going to have as much corruption and greed, because you're going to have people who are actually smart and who are actually healthy and who are actually fucking mentally aware, going, wait a second, why is the world running this way? Why is the 1% controlling the 99%? But it's easy to have that structure of the 1% controlling the 99% when the 99% are fucking unhealthy, mentally just low IQ, and just follow the herd. Follow instructions. Do what you're told. Don't know any better. Just straight ignorance. Ignorance is bliss, right? That's all I mean. Yeah, you can, Kashif. You could go, you could, like, I'm not telling you can, but there is no real purpose in this life. So just as I'm saying that you have that right to constantly push yourself and chase a life of fulfillment and accomplishment, you could also just go jump off a fucking cliff and nobody will give a fuck. Only your immediate family will give a fuck. That's it. After that, you're just another body, like, and that's been gone through history. Only thing promised in this life are death and taxes. So you do what you want with that information. You either take it with a negative mentality and you live a life of misery and depression and sadness, or you take it with a positive mentality and you take advantage of that. Yes, sir. All right, let's see what gold's gonna do at 17.15. GJ, are we finally gonna get? I don't want to jinx it. I always jinx it. I'm not saying anything. I probably jinxed it. I want to get the pop to 0.800, but I for sure jinxed it. Yeah, it's too late. Come on, baby. One big bearish candle coming down after I said that. Straight to 0.200. GBP USD we didn't touch. Euro USD, we might actually get our sell setting up on Euro USD for some sell scalps like pretty much soon. USD CAD we're not touching. Dollar still holding some short-term strength. Yeah, it's only another 13 pips on GJ, and you know what I mean? We're good to go there. Yeah, life is all about perspective, and there's extremes on both sides of the spectrum. There's extreme wealth and there's extreme poverty too, right? So it's just about how you want to view what lens you want to view the world through. That's honestly all it is. You know when people say like the world is how you imagine it, it really is in your own personal life. There's a lot that you can. Oh, let's go, baby! Let's go, baby! Round of applause. Tap that point 800. And gold's also reacting to 1715. Let's see if we break below or if we create a support here and reject. EU, we just need some stronger bearish candles on EU and to clear these 1 minute lows and some continued dollar strength. New hourly candles in 18 minutes, so keep an eye on that if you're quickly watching GJ and stuff here. GJ came close enough, man. 5 pips away, close enough, man. It's about to come back in the range. Yeah, Sarb already knows. Sarb already knows. If you clearly didn't pay attention to anything I said. You know what I mean? That's the last shit I give a fuck about. GJ's teasing. Gave that quick little impulse. Was still just ranging. I like how this bearish candle didn't break 1715, but we need some more bullish candle closures on 1715. There goes EU starting to break down. If we can have the continued momentum, finally starting to break these lows. Yeah, GJ really teased the boys. It's cause Monty fucking jinxed it this time, guys. Blame Monty. He said it needs to hurry its ass up. It listened to him for a second and said, "Fuck you, buddy." Who you giving directions to, huh? Yeah, gold. I like these reactions so far at 1715, but we need some stronger bullish candles. Otherwise, we will break below. If we can create like a flat candle body support or like a little bit of a double bottom similar to this, then I'll be more confident taking buy bounces. Otherwise, if we break below, we will dig deeper and possibly adapt to scalp sells. But I would prefer the buy bounce again. GJ GJ looks like it might snap back into range. What would be ideal is if this 1 minute candle just retests these little minor highs and then ends up flipping bullish again to go to straight to 0.800. It could be possibly for this new 15-minute candle would be ideal. EU slowly making its way down, but honestly, still nothing too significant yet. Like 5 to 10 pips. Pretty slow London. What do we got going on here? Irish foreign minister says we are making progress on the protocol. Timing of the UK move could not be worse. Oh, this man fucked up our. Oh no, this was earlier. This was earlier. This guy was restricting our. This man was restricting our GJ buys. The Irish foreign minister says not for the first time EU sees Britain as a partner they simply can't trust. Drama. So this guy was fucking up our. If you guys want to blame someone for why GJ didn't go straight to 0.800 right at London, it's because 15 minutes in we had this dickhead talk some shit. You know. For EU sells, if we remain below 450, I want to target at least 2015, but it's pretty slow right now. You know what I mean? So pretty much as long as the bullish candle stays smaller than the bearish, it looks good. But if you see like a bullish engulfing, then we could just snap back in the range, and I would stay out of it. You know what I mean? But if we get bearish candles and then smaller bullish candles, we just slowly make our way down. I want to target 2015. ECB Not says the starting point in ECB's discussion is that rise in rates reflects better growth inflation prospects. Not too big of an impact. Yeah. I'm just going to go fill up my water bottle quick here. Honestly, markets tonight are pretty slow. If you guys caught those initial GJ gold buys from earlier in the night, or if you caught the GJ buy scalps, then I would suggest just waiting for cleaner setups because so far London's been pretty ass the first 45 minutes. Hopefully, the next hourly candle or coming towards the 4 hour and Asian close, we'll get some cleaner setups. But so far, it's been pretty shitty, in my opinion, especially with some of these little mixed headlines causing a bit of indecision on GBP and Euro with the Irish foreign minister's comments. Hungary government could announce further lockdown and measures on Thursday, including the closure of primary schools, shops, and that's it so far. Gold. This is a nice reaction so far, but this bullish price action right now is way too weak, right? I need to either see another reaction at 1715, like a double bottom failure to break and some bullish impulsive candles or some minor bullish structure developing. But I like the reaction so far, and we can see how we've reacted here previously where we had the support buy, retest buy, and now potentially reaction buy. Yeah, I watch the stock market, but not like individual stocks. I watch like the overall indexes just to see investor confidence or fear. Like I know when stock markets across the world are trending bullish, that's telling me that overall smart money and the market movers are still very optimistic. And especially when you know that like the overall global stock markets are bullish and like your safe haven currencies are bearish if you do have that situation, you know? Dollar's continuing up, so yeah, nothing's looking so clean right now. Maybe better at the new hour. Like gold's looking like it's just messing around. It could still test a bit lower and break a bit lower, so I'd wait for that. GJ, I'd wait now as it's just ranging. GU did the sell play from 395 potentially down to 392, but Euro still looking a lot potentially cleaner too still if we remain below 2045. And I want to see how these hourly candles are closing. Yeah, see what I mean here? See how the bullish price action was pretty weak. Like we had this strong bearish candle, then a few weak little bullish candles. That's why gold didn't look so favorable yet. Now that we have this retest here again, if this candle closes back bullish, then yeah. But otherwise, this is why I said it's best to stay out. It's best to stay out of that buy for now. This initial buy played out good. I know some people took the higher risk sell there. Now here, I didn't advise to take anything. It didn't look too good. Same with the sell too. Like the sell was pretty impulsive here. Didn't look that good in my opinion. What are the best economic indicators and information you use to gauge sentiment and fundamentals? Well, for sentiment, I just told you guys with the safe haven currencies and the stock markets about what it tells me about investor confidence, optimism, or fear. And from a more macro perspective, some of the data figures that I like to look at for specific countries are the PMI figures. The PMI figures in different sectors for a country are good reads about its economic health when you watch like the month change over and over. But obviously, if you want to go into more detail and start tracking like a country's economic health alone, then every month you could see their PMI figures, their jobs figure, inflation, and retail sales. But for general market sentiment and investor behavior day to day, I primarily look at the global stock markets on intraday time frames and safe haven currencies and like the volatility index and stuff, you know? Hey guys, we might be able to adapt to some GJ sells here if we get a break and retest below point 500 here. But I don't want to start jumping into those willy nilly. I want like an impulsive break and then a retest and continuation down to retest point 200. Just because with those negative comments from the Irish foreign minister and how we had this rejection almost at point 800, then snapping back in this range, you can see we're starting to come to this order block low, right? So We might be able to, if we break below, then maybe. But other than that, I think it's best that we just stay out now. It's just rain. Like, this is starting to look messy on the intraday time frames as well, if you guys feel me. So I think it's best if we just stay out now. Especially if you guys caught those buys from 0.500 already up to close to 0.800. We were like 4 pips away from the target we wanted to tap, you know? And we still have the GJ news. Yeah, gold's gonna dig deeper and come. It looks like it's gonna come back to revisit these lows, but I didn't advise taking that sell or buy. I just advised to stay out, as we already took this previous buy, and I want to still watch price action accordingly. Euro USD is still looking good to slowly make its way down. I want to get 25 to 30 pips down. That one's still looking good, is what we were talking about. Yes, sir. Yeah, we're getting a little bit of short term with like Hungary government going into a lockdown, that Irish foreign minister, negative comments, you know? Yeah, sure, I'll check this out. Yeah, that's why I didn't want anybody to rush gold buys again when we are retesting that area. Yes, gold has just been bouncing around from those 1707 lows and those highs in that area. We just watched that 1721 rejection now. Yeah, this was just a price grab, liquidity grab, and we were still respecting that bearish market structure up until that point. The only thing I'm iffy about is how we might be potentially breaking above there. So I want to see where gold, if gold comes down here again, if it doesn't break, then it's still going to potentially keep ranging, right? Uh-huh, uh-huh. That's a smart idea, Shane. Especially if you guys already caught like the GJ buy scalps from before, right? Or the gold buy scalp from before, or the sell from 1721, then there isn't really anything else too favorable I saw, you know? Yeah. Yeah, sure. Yeah, if you guys send charts, I'll check them out. Don't worry. Sure. Let's check this out, Dylan. Yeah, if you're taking buys, first of all, in my opinion, you should have been looking to take the buys at 0.500, right? So if you're like this should have been where you're looking at, like where we were looking to take the buys was the 0.500 level, all right? But since you missed that area and you weren't confident in taking it in that area, you jumped in up here. But your stop loss would have to be below these 1 minute lows then, because that's where your sell is going to be invalid. You understand what I'm saying? So one, what I suggest is you should have taken your buy entry at 0.500 when we were watching that support area. And then two, since you got this late entry here, you would have had to put your stop below these candle bodies. It would have had to been a stop like this. You know? Because your stop loss placement is dependent on either two things. One, how much pre planned money you are willing to lose in risk, or two, the price point where your trade would be invalid and you're not willing to lose any more profit or any more money. So if you're taking buys up here, we could come down to revisit these lows at 0.500 and come bounce again, right? you see what I'm saying? So your buy trade wouldn't be invalid unless we broke below these 1 minute lows and cleanly broke below 0.500. It has to be based on market structure points of previous highs and lows. And what point would your trade be invalid? That's where you would want to be stopped out and you don't want to take any more of a loss. Because in this area, you still have the potential for us just to bounce around, range, and come back up. Just like when we come to GJ here now, that's pretty much what it did, right? It's just ranging though, but you get the idea. See why I didn't want anybody to rush gold sells? Because we could get the buy still coming right back in if we get some clean price action above 17.15 now. Because even though this was a pretty strong sell, it got corrected in almost 3 minutes. So I want to be very cautious about where this hourly candle is closing in 3 minutes. Because if this gold hourly candle closes bullish above 17.15, my buy bias I was telling you guys is still active. We just had to be patient. That's why I didn't want anybody to rush buys, and I didn't want anybody to jump in sells for no reason, and especially if you get greedy and you don't close in, right? Or you don't close your profit. So we have these hourly candles closing in a couple of minutes, and we'll see what sets up. I want to see how this hourly candle closes. If this was just a retest, or if we come all the way back down, or if we close above 17.15. So I'd rather just wait the like 2 or 3 minutes left now. 2 minutes pretty much. Yeah, no problem, bro. I'm glad you enjoyed the stream. If you guys enjoy the stream, make sure to like and subscribe. You know, it really helps the channel out, get more exposure. It's free to do for you guys. You just click 2 buttons, you know what I mean? And also make sure to follow all these free Capital Hungry resources like the Capital Hungry News Twitter. It doesn't post as many headlines as the news terminal, right? That's more for the private members. They get access to the news terminal you see on the left side of your screen. I just show that on the YouTube stream just to be a nice guy. But this Capital Hungry Twitter feed, it's been reposted by like some pretty big pages here. Where is it? That's too much to scroll back. But like Wall Street Bets reposted from here, Forex Factory sourced from here, other like Forex websites have been sourcing headlines from the Capital Hungry Twitter feed here, so you can check that out. Check out Monty's Twitter right there. The Capital Hungry YouTube channel, where you have all these different educational webinars on technical and fundamental topics, psychology topics as well, and the Capital Hungry free Telegram analysis channel. If you want more, then you can sign up for the Capital Hungry private channel, but signups are limited to 350 to 400 people max, just because it gets too hectic and I'm the only person that runs the service and provides everything. So it becomes too much for me to juggle having hundreds of people to deal with and my personal life and my personal trading as well. So I'd like to keep it controlled at around 350 to 400 people. I think we got like 300 now, but those signups are still open if you want more. There you get access to this Capital Hungry news terminal. You get access to key level price alerts like on gold where you had the price alerts coming up. You get access to session alerts. You get access to these Zoom chats that we do every single night at London, sometimes at New York, other members' analysis, you know what I mean? And stuff like that. Capital Hungry Market Monitor, which is coming in. You get access to the Capital Hungry Banter chat, where other members share some trades they took and stuff. Like this member took the 17.15 gold buys. You know, other members just share analysis, talk their shit and stuff like that. The Capital Hungry main feed, where we do higher time frame analysis on pairs. Like here you have a New York session recording we did, higher time frame EU analysis, GJ analysis, gold analysis, the weekly flow, everything. We do Literally, Capital Hungry, if you sign up, it is your one-stop shop for trading, I think, to be honest. Like with the news, the fundamentals, the technicals, scalp trades, swing ideas, intraday, the Zoom sessions, the price alerts, with everything combined, I think you have pretty much everything you need to trade the currency and equity markets. This is $100 a month just because of everything we do every single week. Every single week we start with this process where we do psychological reminders, right? On Sunday evening, Sunday afternoon. We do these psychological mental reminders. We review in-house created psychology webinars. Then you get like a weekend, then you get like a weekend news briefing report. Then we do a weekly recap and refresher webinar, which is usually anywhere from like 10 minutes to 30 minutes long, reviewing what happened in the previous week. You also get a weekly economic events and notable events report about any economic and political events going on. Weekly political events report. Then we do a market sentiment and investor behavior analysis. Then a capital hungry intraday market update ideas for like scalp and intraday trade ideas. Then we do London Zoom sessions as well throughout the week alongside with these YouTube sessions. We also send like market updates in the capital hungry trade room. I'll send charts, people like I'll send updates of what we're looking at on gold, what we're looking at on different pairs. You got key level price alerts on different pairs, session reminders, other members, like I said, sharing their analysis. You get access to the capital hungry newsroom and news terminal. You get access to the capital hungry webinar vault. Where the fuck is that? You get access to this capital hungry webinar vault where this is all the educational webinars, right? This is like 50 plus educational webinars on different topics, fundamentally and technically, strictly for learning as soon as you come in, so you can understand all the concepts we use day to day and just what I've learned through my 4 years now, fundamentally and technically, right? On every single topic you can think about. So you get access to all of that. And then even in the main feed for like, if you were to search up GBP JPY, there's like over 200 breakdowns on GJ from like the last couple of years. There's like 200 breakdowns on gold, 200 breakdowns on Euro USD, analysis on USD CAD, on stock markets, on fundamental catalysts, on different fundamental events. You know what I mean? So a lot of shit going on all the time. Yeah, my girlfriend blocked me for some reason. So I was like, unblock me. Girls fight a lot, you know? Fam, I don't know why she blocked me. Go ask. What the fuck happened here? No, we're still good at the headlines. All right, so what's going on with gold? Oh, so we retested 1715, and so I wasn't paying attention with the new hourly candle, man. Damn it. All right, so gold had a bearish candle close below 1715, then the hourly retested it, then continued down. So nothing, we weren't playing anything there anyways. Unless you guys took those sells, but I didn't advise on that. GJ still ranging and respecting 0.500. Euro USD still respecting our sell zone, but just very slow and stagnant. I just gotta go to the washroom quick, guys. Open up a window and stuff here too. It's getting about 5 minutes. All right, so it's 4 a.m. Eastern. London session wasn't too eventful, but yeah, the news terminal is pretty expensive. But besides these gold buys that we got from 1715 to 1721, and then anybody who took the 1721 sells, not too much else has happened there. GJ gave a couple of nice scalps for like 10 to 20 pips from 0.500 a couple times, but then we started to get some exhaustion and buyers failing to break higher with the negative headlines from the Irish foreign minister talking shit about the UK. Euro USD is still respecting our sell zone, but we're starting to see a bit of exhaustion of flat candle body support. I would like to clear below this low and have a continued meltdown to our 25-30 pip range to the downside. But so far, London session has been fairly slow and stagnant. Dollar still holding strength, which is good. So that's a good sign for EU to start slowly moving lower. But let's just watch how markets go into Asian session close. So don't forget about the new 4 hour candles coming up at 5 a.m. Eastern, and then the entire Asian markets close at 5 a.m. Eastern. Obviously, Korea, Japan, they closed earlier. I'm talking about India and the entire Asian markets overall as we come into pre New York hours. It's best during these pre New York hours to plan potential trades for New York session if you're still trading, because the trade ideas and analysis we shared, even though we just had some minor moves through London, those trade ideas are still very much valid through New York if we have stronger volatility and more volume through New York session instead, you know? So, and usually you do have that where one session can be slower in range. You might see more impulsive moves the following session. So, we can see how that goes for New York. You want me to stream through New York as well? No, man. That's fucked. That's like another 6 hours of streaming. You guys got Raja at New York anyways. If I stream at New York, I'm gonna get even less viewers than I already get. And I'm gonna be tired as hell. I don't have Instagram anymore. I only have the social medias that I shared on the screen. Uh, Instagram, I used to get too much drama with all these Forex marketers and Forex gurus just because like none of them had any real knowledge or passion for the markets. So I was wasting too much time and energy with nonsense on on Instagram. And really Instagram and these different social media platforms, unless you use it to make money, then it really has no use for you. A lot of people make an excuse like they use it to talk to their friends and family, but let's be real, you could text them. So unless you make money on social media, there's really no purpose for it, in my opinion. I don't know if you guys could have your own opinion. It's really just a toxic environment where people portray a fake life. The contest, thanks for reminding me, I'm gonna send that winner in the Capital Hungry Analysis channel. So remember everybody, this Instagram page damn, it got 669 followers. So all of the people that followed this Instagram page, it was just a random IG I made only for because I don't have Instagram, right? So this was a random IG I made, like of a picture of a glass. Got 92 comments. I don't even have IG. I can't even see the comments. But anybody who followed this page, your IG username is going to be put into a draw that I'm going to do when I wake up, and I'm going to send the winner in the Capital Hungry Analysis channel and on my Twitter. I'm going to announce 3 winners out of this 669 people or whoever many people it is after like I refresh, you know what I mean? Some of you guys are probably following it now. It'll probably be at like 700, I guess, next time after I refresh it. But this is your last chance to follow this and enter. All you have to do to enter the raffle is just follow this page, and then your IG username will be entered, and then I'll be picking 3 people. And yeah, it's just an empty glass. Has no purpose. I actually got more followers than some people who are like trying to like Protein Paul from Trading with Paul Asian Stream. He's trying to start fresh, but he only has like 200 followers. Iron Man only had 800 followers. He only got 1,000 today because there's drama with Ted. But imagine these guys being on IG for that long, and then like I just come on with an inanimate object, and it gets more fun. and it gets more out and it gets more followers than you, you know, then you got to reevaluate what you're doing on social media. So yeah, so I'm gonna be picking three usernames, and I'm gonna announce that in this Capital Hungry Analysis channel, and those people will win a free month in the Capital Hungry private channel, like where I showed you, you get access to all that stuff. You'll get access to a month in the Capital Hungry private channel if you win. Yeah, Raja, all these guys followed it. Yeah. The first reason was for me to prove a point of how stupid social media is. About having a following means really nothing unless you make money out of it, and to get more followers than Protein Paul, just to show like, man, I could get a glass to get more followers than you, or like some of these guys like Iron Man, or like some of these guys who really struggle out here just because they don't have a personality, you know. But I'm gonna announce it like after the stream. I usually go to sleep, so I'll probably announce it sometime in the evening, like maybe at like 4 or 5 p.m. Eastern. I'll announce the three winners. All you gotta do is follow this page, Glass Empty 2021. If you want to comment on here, maybe you'll get an extra submission. Yeah, there's 700. Yeah, I don't have IG, man. I'm sort of sad that I missed that whole Iron Man, Ted. Like they went at it for a little bit, eh? Which one? You guys probably saw. Like Ted gets a lot of live viewers. He probably had more live viewers. He probably had like triple the live viewers that I got on here. Like easily 1,500,000 people watching him. So like, what were they even talking about? I talk to Ted every day. He already told me, like he said I would have laughed and shit, but yeah, this isn't my this is an IG page that my girlfriend made just for this contest. I don't have Instagram anymore. I used to have Instagram with like 20K followers myself, but it was just too much of a distraction and way too toxic, you know? Who reads candles better, me or Raja? Me. I'm better at analysis than Raja. Raja's good at what he does, but I'm better at analysis 100%. You guys could tell him that. Raja just has more viewers and a bigger following because he's obviously been doing this for like 5 years, 4 to 5 years now, right? Like Raja's been streaming. Have you guys seen this video? It's pretty cool video, but the best Raja's in a heavy lead. What was it? Fuck, man, he sent it. Best Forex live stream. Where is it? Somebody made this like comparison of the views every live stream gets, and Raja was obviously well ahead because he's been streaming for so long, right? But even I was on the list. I was like, what the fuck am I doing here? Fuck, man. I don't know where it is, man. Some guy made it for Raja. I only had like 50 views. Anybody know that thing? Yeah, Raja's much more popular than me, and Raja's been streaming for much longer, right? He's been streaming for like 3 4 years now, and 5 days a week, so very consistent with that. But analysis wise, no way, man. Come on, let's be real. Where is that? It showed how many views Raja gets. Is crazy. Oh, I found it. Look at this. So this is somebody made this, right? You guys can check this out. So this is the popular YouTube live forex streams. This is September 2019, and you have like Wickstone Live, Todd Capital Group. I'm on there, but you're gonna see zero for me because I didn't start streaming till like 4 months ago. You know what I mean? So Raja already in September 2019 was getting 136,000 views. Or is this for the year? Right? So you can see it's moving. And then Todd Capital Group started streaming. Trading with Paul started streaming. Trading with Monty took a, like, you know what I mean? It goes through the day. It's pretty cool. I was at zero because I wasn't even streaming until like later. Then Seed came. Then Seed started streaming London. Todd Capital Group. Todd Capital Group took the biggest shit. He shit the bed the hardest. He started early when Raja did. Like he started like 2019 when Raja did. So he had the biggest potential to take over London and have the same growth Raja did, but from London. But then Monty took him over there. What do you mean? Raja sells magic keys. Raja sells a course, an in-person course. What are you talking about? Market fluidity, the in-person boot camp. Oh, here's me. Oh, what the hell? What the hell? So I came in. What the fuck? I came in September 2020. And this was my peak, was 52,000 views, right? But mind, you guys got to think about one very, very key difference, all right, between my views and everybody else's. Obviously, I'm not close to Wix, but I know you guys going to hate on this. I should be second. You know why? If I streamed, goes by how many views you get a month, okay? On average, my streams maybe get anywhere from 5 to 10K views a stream. Every one of these guys views trade with Monty, Seed, Qwerty. They stream 5 days a week, so they have 3 extra streams over me. You know what I mean? So I feel if I also streamed 3 extra days a week, then I'd have that extra 15,000 views a week, because 5K views a video. You know what I mean? So I showed up in 2020. I already passed HFX, Trading with Paul, Todd Capital Group, but I only stream twice a week. So you guys gotta adjust my numbers for me. This is 50,000 views from streaming. Yeah. So you have to think about it. If you look at my views on average, it's nothing crazy, but some of these live streams, they get 5K views, 6K views, 10K views, 7K views, right? 5K views, 5K views. So let's just say on average, a video gets 5K views. So if I streamed an extra 3 days a week, that would be an extra average of 15K views a week, which would average out to an extra 60K views a month, which would put me at a monthly average about 120. You know? Obviously, it's still going to be way behind Raja. He's been streaming for like 4 years now. But yeah, you guys gotta give my thing. You guys gotta give my thing a chance here. But this was a cool little thing. Showed Raja's views are crazy. No, guys, you guys really think you're doing something, eh? Okay, yo, Jeeves, stream 5 days a week, then prove everybody wrong. What do you think? I'm a dumbass? I'm too busy because we do the Zoom sessions like every day in the Capital Hungry private chat. Oh, what did I miss? Oh shit, gold went straight back to these previous lows, eh? Yo, this could be a pretty aggressive buy bounce here if we don't break again. But best to just stay out if you're not anything. GJ finally broke below 0.500. Might give us a deeper retest. EU, anybody still in the EU cells? Still looking pretty good. UCAD, dollar's holding some strength. GU back down to this previous low as well. It ran the range to range trade from 39600 sorry to 39200. That chart represents yeah. And then you got QWERTY. QWERTY FX doesn't count because she just streams a random screen and doesn't talk for hours, or streams one of us. She'll stream like Raja stream at New York, or like stream my stream or Monty stream at London. So she doesn't count. And Monty and Seed, they're my boys, but if I stream 5 days a week, nah, I'd be ahead of them. Yeah. So you know what I mean? But anyways, guys, we are coming towards the end of my stream hours shortly. I know you guys don't want to hear this. I'm sorry. Unless you guys want to send me a couple more charts to look at. We're pretty much coming towards the 4-hour candle close. We're coming towards Asian session, market full, Asian session, market close, pre-New York hours. You know? Remember, only safe further sells if we have candle closures below 1708. Otherwise, we might have another aggressive bounce here. Okay? EU starting to play around, but hopefully it can still continue to make its way down to the targets we want through New York. GJ looks like after those negative comments from the Irish foreign minister, we're going to come down to get a deeper retest to the bullish structure at 149.200. Yeah. Yeah. If you guys enjoy these streams, you want me to do it more often, then make sure you like and subscribe. And you share this YouTube channel around. You know what I mean? Share it around with your friends and family. Share it around with other trading communities, chats, and groups, and say, hey, this was a pretty good stream. I learned a lot here. We're talking about markets for a straight 2 to 3 hours. Every single pair we looked at, different economic events, headlines, market structure, price action, gave out a few trade ideas, and then primarily just watch price action. But everybody, I'll see you guys all later, okay? I'm not feeling too good, so I'm just going to get some rest a bit earlier here. But I'll see everybody later. Private chat. Make sure you guys rewatch this and take notes for all the analysis that was given at the start of the webinar. And some of those trade ideas that we said, like the potential reactions at 1708 and the trade ideas on GJ if we do get the pullback to 0.200 or back above 0.5, still very valid through New York if you guys are trading New York session, all right? Yeah, I appreciate you guys. Private chat, my private chat aristocrats, the YouTube chat refugees. Appreciate you guys. Appreciate the support. Thanks for coming out. I will see you guys later.